It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, April the 19th, 2016. Cruising our way through this third week of the fourth month of the year 2016. Hope you guys are having a great day so far. We have another exciting newsletter for you tonight. We've got crude, S&P, gold, and of course the euro. Crude oil continues to trend higher this evening. We're looking for more opportunities tomorrow, although of course its shadow, the S&P 500, appears to be taking a bit of a siesta this evening. Got a bit of a range on the E-mini markets here going into tomorrow. You got the euro and gold, both appear to be ready for more buying opportunities tomorrow. Got some pretty good trends on these markets today. We got three trending markets. We got one range-bound market. Before we jump into our charts though tonight and start putting together strategies for tomorrow, I want to remind you the only place to find this full-length newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it's a wonderful place to find lots of trading videos, although you're not going to find the full-length version of this newsletter on our YouTube channel. Make sure you subscribe to our YouTube channel if you're there, and then follow the link in the description of the YouTube video. Come over here to sidewaysmarkets.com and watch the full-length version. While you're here, don't forget to grab a free pass. Come out and test drive our live trade room. Come out and join our trade room as a guest in the upper left-hand corner. Register as a member of our nightly newsletter mailing list in the lower left-hand corner. Name and email address, and I'll send you an email every evening when that video is ready. Right below the video tonight, you'll see a spot to download all the charts in tonight's video. And of course, over on the right-hand side, I'll encourage you to learn more about what it means to be a student here at School of Trade, learn more about our strategies, learn more about our trading goals and our routines here, of course, what it means to be a member by joining our trial membership on the right-hand side. Don't forget, if you have any questions along the way, we've always got someone standing by 24/7, 365 to answer all your questions. Ready to rock and roll? Helmets on, seatbelts fastened. Hope you guys voted today if you're in the state of New York. Don't forget, no vote is a vote. Make sure you voice your opinion. If you're going to pay all these darn taxes in the United States, right, you might as well get your money's worth. Go to the library, use the post office, right, take public transportation, get every drop out of that taxpayer dollar that you spend every year. Anyways, bottom line is, hope you guys are having a great Tuesday so far. Let's look forward to Wednesday. Wednesdays always bring inventory days for crude traders. Tomorrow morning we got news at 10 o'clock and 10:30 a.m. tomorrow morning. We will be sitting on hands 5 minutes ahead of the existing home sales report and 15 minutes ahead of tomorrow's petroleum status report. As I always remind you guys, Wednesdays are always a bit of a challenge for crude traders. In my opinion, the consistency really drops off after 10:15 a.m. Really anything after 10:15 a.m. if you're trading oil or, the last few months we've seen the S&P 500 shamelessly follow the oil market after inventories. So you might just want to lump the S&P and the E-minis into this tomorrow as well. But strictly for the crude traders tomorrow, and again, possibly, watch out on the S&P. But historically, though, after 10:15, it becomes a gambler's market on the oil market. So I'll tell you the same thing I tell all my students tomorrow morning. We've got a great window of opportunity. I always recommend from 7 a.m. until about 11:30 a.m. Monday through Friday. On Wednesdays, though, it's going to be a little bit shorter. 10:15 is going to be the cutoff for crude trading. Now, that doesn't mean that you can't trade after that 10:30 inventory report. Just be aware, though, it's going to be a lot less consistent price action. It's going to move very, very quickly. So make sure you wear your helmet tomorrow if you plan on trading after 10:35, 10:40. We'll obviously be trading that stuff live in real time tomorrow morning in our live trade room. So you know the schedule for tomorrow, 10 o'clock and 10:30 a.m. Eastern Time. And of course, inventories at 10:30 a.m. mean tomorrow is very much a big variable for all of us crude traders tomorrow. I'll be focused in the trade room tomorrow morning. We open up at 8 o'clock Eastern Time. I'll be focused on trading from 8 o'clock until 10:15 on the oil markets tomorrow morning, and then we'll sit on hands at 10:15. We'll wait for that news to come out at 10:30. As of 10:40, 10:45, 10 to 15 minutes after that news comes out, things will start to settle down, and you can follow some trends going into lunch. Just be aware, though, after 10:15 on Wednesdays, it is a gambler's market. Starting off here with crude tonight. Crude is bullish this evening, but a big overshoot of those channel highs tells the buyers to stay patient for bear traps below the channel lows tomorrow. We have a bull channel, a spiking channel, and a measured move to work with this evening. The bull channel has an overshoot, so we want to get an overshoot at the lows for the most reliable trades back to channel highs tomorrow. The spiking channel is testing the correction zone, but the bulls don't appear to be very interested at this time. They've already tried twice, so we'll be looking for a trap low for the best trades back to the highs tomorrow. A couple things here on the crude tonight. Technical clues. First of all, we got a bull channel here. You can see bull channel coming up. Beautiful looking bull channel, but as you can see here, pretty much a triple overshoot. This was a very good example this morning. We saw this market running higher, and if you remember what we talked about this morning in the trade room, we saw the double overshoot, but just the way this thing this move right here, you can see it just with extreme strength. Every market has a personality to it, and you've got to get to know when a market is really kind of revved up, right? No pun intended there for the energy market. But the bottom line is, as this thing pushed into the high, it barely even blinked at that channel high. Double overshoot. I said, all right, there's double overshoot, but there's no way I'm stepping in front of this freight train right now. And you can see it went triple and then finally came off that high. These are always, I talk about this a few times every week. Whenever you're looking to sell an overshoot of a bull channel, right, or an overshoot of a bear channel, look left. What type of candlesticks are you getting going into this, right? Look at the size of these green candles. This was not like a whoops-a-daisy, we double overshot. This felt like we're going higher. I don't care where we are. That's just the way the market felt this morning, and you've got to be able to pick up on that stuff. It's one of the definite benefits of being with me in the trade room every day. I'll be able to use my more than a decade of experience watching this price action every day the same way every day, right? That's the key, so you can pick up on those nuances. So the bull channel has a definite double, if not triple overshoot, depending how you look at it. And of course, with that overshoot, we'll expect to see an overshoot at the opposite side. Remember, with a bull channel, we're looking for rotation. Low to the high to the low, low to the high to the low to the high. If we overdo that rotation, we expect to see, right, that binge and bust on the opposite side, right? Much like every other market that we see around the world. Now, with that said, we also have a spike in channel. This spike in channel, right, kind of lends a little bit of credibility to what I was saying earlier on, just the way this market felt as it was pushing into the high of that channel. And again, under a lot of circumstances, a double overshoot of the high of a channel will be a great selling opportunity with, of course, a 1-to-2 risk-reward ratio. But in this case, though, go on the back of a spike in channel, there's just no way you want to sell into that first, second, or third test of that spike in channel. Remember, those are the magic numbers, right? 1, 2, 3. So once we see that spike in channel, now we know we have the correction zone, right? That correction zone is going to go back to the base of a channel and the first swing. And we also have, what is very important is where the spike in channel really started. And this is pretty much where the beginning of the spike, there's your channel. And so we know we have ultimately, remember, the rule of threes inside those spiking channels. We'll talk more about that tomorrow in the trade room. And of course, we have the correction zone, which is the first pullback to the low of that channel. You can see we're right in that correction zone. And then, of course, if that correction zone can't hold, and this is why I bring this up, because that spike support down here, right about 41.70, this whole area now becomes ripe for a test of that low and then back up, right, back up to that high again. So, as you can see here, we pulled back into the correction zone. Buyers tried once, buyers tried twice. It doesn't look like they want this thing. So we see a couple really strong green candles here. You can see 3 really strong green candles, but look what happens after those strong green candles. I'll tell you right now, if the buyers were interested and they saw that green candle right there, wouldn't they look to buy this? Wouldn't they look to buy there, on the pullback here? We're not seeing it right now. And now as we open up at 6 p.m. Eastern time and the electronic markets open up, we're now gapping lower here. So clearly there is less than desirable interest in this correction zone. That leads me to believe here this spike in channel may fail and it may push all the way back to the base of that spike. Now, follow the bouncing ball. As we pull back, we're looking for seller failure into strength. Strength turns into pullbacks, and pullbacks we'll go back to, or continuations, we'll go back to the highs. Strength in, right? Failure into strength, strength into pullbacks, pullbacks back up to that high. So we know right now so far is overshoot of the high, looking for an overshoot of the low. It may not come, right? Let's be honest here. It may not come. Nothing's guaranteed here in this stuff. But of course, with this spike in channel and the correction zone right now, just not looking very perky. It doesn't look like these buyers want this right now. Doesn't mean it can't go. It kind of lends credibility to a possible test of the 41.7 spike support, a possible break below the low of that channel, and then back up we go. Next thing is going to be this measured move. The measured move really is going to be an area of support or resistance here right now. You can see the measured move has been acting as support, but once we get back below it, and the reason why I say this is because that's going to be an area of resistance that if we break lower here, we're going to want to make sure we use that as a target, then back to the high as a target, and then we have a double up, which you can use as a bit of a runner. I would wait for, though, personally, I recommend take your profit at the high, knowing that the double up is just a few moments ahead. And then if you got an extra target on there to let for run, up to the channel high. Okay, so keep in mind, this whole area right here is going to be one big block of resistance here. So front run that resistance around 42.85 or so, and then try to hold that portion up to the high of that channel. All right, guys. Now, here's the bulls want to see. The bulls want to see a trap low below that 42.11. Really, any of these areas of support are where the buyers are going to be looking for opportunities here. Remember, as it goes lower, find an area of support, look for seller failure into strength. Don't forget that area of resistance there overhead. Get back above it. Use the area of resistance for support. Turns into pullbacks, and pullbacks go back to the high. Okay? Again, very difficult to tell which of these support areas is going to be the one. Now, we are in that area where, like I said before, we are in the correction zone of that spike in channel. So all we need now is a new higher high, hold that pullback, and we're ready to buy as it goes back up again. Okay? New higher high, hold the pullback, and now we're ready to be a buyer again. My gut tells me, though, that we trap low just because of that double overshoot and just this lack of real follow-through that we're seeing right now. And you can see as I'm saying this, right, we're starting to pull down. Don't just buy it, though. Wait for that failure into strength, strength into pullbacks, and then pullbacks as it goes back up to that high again. Oh, one more thing here. What about the bears? What are the bears looking for right now? Bears looking for a double overshoot at channel highs, right? Remember, think about channel rotation. Low to the high, high to the low, low to the high, high to the low. The bears have a tough time right now. If we find ourselves back at the high again, that's where they can look again for a double overshoot and sell it back down. Again, though, don't forget, we saw a double overshoot today, but it was on the back of a big spike in channel, and so you got to know when you're going to be taking those trades. Don't forget, if you're looking for a spike in channel, if you're looking for a double overshoot at a channel high or a bear channel low, don't forget that 1 to 2 risk-reward ratio. It is a counter-trend reversal trade. It's reliable in certain contexts, right, but not every single time, just because, again, you saw a good example of it here today as well. Okay? And then last but not least, for the bears, the low of this channel will be support, but it will quickly become resistance if they can break and hold below it. Get below that area of support, use it as resistance, and that's going to be the signal those sellers need to start selling down to areas of support. What areas of support? Spike support, 41.23 support, and the lower day today from 40.88. All right, guys? So bottom line is, as this price goes down, sellers, if you guys can hold the pullback, you take control. Control to what? Control down to those support areas below. If those sellers cannot hold the pullback, buyers will be waiting to buy right into their failure, up to that measured move area, get above it, break out, pull back, and then keep going up to that high. You get a pretty good plan there for the oil trading tomorrow. We'll see you guys tomorrow morning at 8 a.m. Eastern Time. We'll be trading that market live in real time. Now, I've been calling this market the shadow here for a while, right? You know, the S&P has been pretty much following in the footsteps of crude oil, and that includes tomorrow's inventory report. So don't forget, tomorrow, if you see the inventory report at 10:30, it's been kind of comical the way that the S&P has about 5 to 10 minutes after the inventory report comes out